we believe that Bitcoin gets to at least half of the market capitalization of gold, there's probably a 10x opportunity in Bitcoin over the next 5 to 7 years. It's just going to be whether or not people can stay the course, because Bitcoin is volatile and a lot of loose holders got shaken out of Bitcoin this year.
Right. That brings it to 1 million, the 10x, right? Basically is what you're saying.
Exactly.
Yeah.
Like 2026 is a year like there's a new Fed, right? But a dovish tilt. And at a time when the ISM's been below 50 for a record more than 3 years. So that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
For all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper is an industrial metal versus gold is a
right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think
it?
that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year, we're betting against that thinking that new highs come early, like in January.
The most divided Fed since before the pandemic voted to lower the benchmark rate by 25 basis points as investors expected. But there were 3 dissents for the first time since 2019. And on the dot plot, a total of 6 members of the committee suggested they were not in favor of lowering rates. There's also a hawkish line in the statement. In considering the extent and timing of additional adjustments to the target range, bringing back language from a year ago when they paused their first round of rate cuts. No surprise, Stephen Myron wanted a half-point reduction, but in something of a surprise, Austin Goolsbee joined Jeffrey Schmidt in dissenting for no cut at all. Next year's dot plot suggests just 1 cut coming. 7 members want no move, however, including 3 who think the rate might go up. The committee statement says economic activity has been expanding at a moderate pace, and the latest forecasts show a consensus GDP figure of 1.7% for this year. But in a big move up, they have revised growth forecast for 2026 to 2.3%.
As I've mentioned before, bull markets built on walls of worry tend to be the strongest and most durable bull markets. Of course, this year we had the trade turmoil, and we've had another shudder associated with the government shutdown and the lower liquidity in the system. But we've gotten past both of those, and we're hoping for a swoosh into the end of the year as many more people start thinking about what the economy will look like next year.